Welcome to the Practical Dreamers podcast, where your dreams and finances collide. I'm Charm,
And I'm Dara.
and we're your guides on this journey to financial freedom. And today we have a great topic to talk about, and that is investing. And we're only going to go over the basics of investing. So, for you gurus out there, this is just a nice refresher. However, for individuals that are just stepping into this is just general information that we wanted to share. Dara?
Yep. All right, guys. So I want to talk about the basics. What is investing, right? So investing is basically the act of distributing your assets and resources into different ventures in order to gain profit, aka income. Okay. So things that you would invest obviously is the income that you make from your profession or um, maybe somebody gave you money. All right. So secondly, why do we invest? So with inflation, a lot of times we lose money if our money is just sitting still in a bank account. So when we invest, we allow that money to grow faster than it would, or more, I should say, in an environment of just a bank account. So it'll actually outpace inflation overall.
Yes, it will. That's why it's important for sure.
Mm-hmm.
So
So what?
yeah, I was going to say, so let's talk about the types of investments.
Mhm.
And ideally, you know, when people think of investing, I think many people choose to think about, real estate, the stock market. It's probably the first things that comes to mind. However, there are other areas of opportunities to invest. And one being, as I just mentioned, the stock market is one, bonds, mutual funds, and real estate, as I shared earlier. However, I think we all miss the opportunity of the initial investment piece that I think is very key and important, which is investing in your 401k or 401(3), excuse me,
403.
403b. Thank you,
Mhm.
403b plan under your employer. Now, the 403b plan, for any of you, if any of you have never heard of that, that's usually for nonprofit organizations. That's usually what they carry, but wanted to share that as well. But I definitely think that those are the first key investment opportunities that many people fail to realize that they should actually be throwing their money into first before jumping into other individual stocks and things of that nature, especially real estate too. So with that, also, I want to make sure that I share with all of you that, before you invest, that you're making sure you're set up financially within your personal budget. And that will be consisting of making sure that you're out of debt, making sure you have an emergency fund saved up, and ultimately just making sure that, you have the funds that you will not miss right away in the short term to contribute to investing.
Right. Because a lot of times, some people fail to realize that when you do invest, this is something that you want to keep in your investment. So if an emergency pops up, it's not something you want to pull at as your emergency fund. So that's why it's really important to make sure that that emergency fund is funded well before you go out and make these extra ventures.
Absolutely. And when we think about that, I think that actually is a great segue into talking through the short-term and long-term goals when it comes down to investment and identifying what those are for you. So as Dara just stated, if you have short-term plans and you're going to need this money, I wouldn't recommend investing, especially as I mentioned earlier, with your 401k plans, things of that nature. There are penalties for taking out money sooner than planned. And then honestly, with the other vehicles as well, there are some penalties there. There could potentially be some penalties there as well. So want to
Mhm.
be mindful of how soon will you need this money that you're potentially investing. If it's for long-term investment, then when I say long term, I'm thinking more so like retirement planning and things of that nature. These are definitely better avenues, especially for retirement, your 401ks and the stock market and things of that nature that you want to put your money because you won't need to touch it anytime soon.
Mhm. Definitely. One thing I did want to mention that is probably on the forefront of a lot of people's minds right now is cryptocurrency, because that is another form of investment as well. This isn't an endorsement for cryptocurrency in any way. It's a very volatile market, and we really don't know what's going on with it exactly yet. So Again, make sure that you do your research before you make any of these investments. But I did want to mention that because I know that that's something that people think of when they think of investing as well.
Well, I'm actually glad you brought that up, Dira, because that brings us to our next topic that I would like to share with our audience, which is the risk versus the rewards when it comes to investing. So when it comes to investing, you want to make sure that you understand all of the potential risk that could lie with you putting your money into that investment itself,
Mhm.
as well as the reward. And I think we live in a world, to be honest, where a lot of people want a fast reward and they don't necessarily consider the risk.
Yeah,
So a
turns
lot of
into a fast fall.
absolutely. And I'm guilty of this personally. I actually, before I really knew much about the stock market, I just know it's something that I just knew it was something that most people talked about. So I'm like, oh, I have extra cash and I have money to throw into the stock market. So I had no idea of how to necessarily research the stocks and things of that nature. So I threw my money in there and I just watched it like it's going to grow quick. And it did not. I, as you said, I fell quick, and all that money I put in, it was gone. And I was like, oh, well, I didn't know you can be in the negative, but I definitely was. So I encourage all of you to make sure that you are educating yourself about the potential risk and you know the risk
Mhm.
before you put your hard-earned money into this type of investment.
Right, because there's certain things that have more volatility than others. Like I mentioned, cryptocurrency is probably one of the most volatile at this point in time. And things such as like an ETF, which is actually an exchange traded fund, or like an index fund or a mutual fund, something of that nature would actually be a safer, less volatile situation because that's a collection of multiple stocks. So it kind of balances everything and keeps you
Mhm.
uh with a pretty mixed amount of stocks instead of just putting all your eggs into that one basket and betting on black only, or even
Absolutely.
worse, like betting on a number. So so yeah, that's the beauty of those types of funds, a little less
Yes.
volatile.
Yes. And so I think it's also great that we give our audience some tips. You know, as I shared, this is a beginner's guide to investing. However, we want to make sure that we share some tips. Now, one thing I just want to reiterate, which is the importance of making sure your personal finances are in order before you begin investing. And that potentially would look like making sure that you have your debt payments paid off, you have an emergency fund, and then
Mm-hmm.
ultimately that you're investing at least 10 to 20%. I should say actually 10 to 15%, excuse me, 10 to 15% into your retirement account with your employer. One thing I didn't add that I think is important to include is that if you don't have an employer or if you're self-employed potentially, you can open up an IRA. So open up an individual retirement account. That's what IRA stands for. It's also an opportunity for you to invest in your future for your retirement, and have the same similar financial gains with as someone with a company that's working with a company that opens up a 401k. The only difference there is that you won't potentially get an employer. Well, you won't get an employer match. That is the benefits of having a 401k under some employers where they do match your contribution. And we'll be happy to get into that into another video later on. However, wanted to share that. Dara,
Mm-hmm.
how about you? Another tip?
One of the things you really want to think about is your long-term goals. Like Charm was saying, thinking about retirement, remember you can't touch these accounts until 59 and a half years old as of 2024 right now. But that you got to remember, this isn't something that you're sprinting to. This is actually a long marathon, okay? And it's okay. You'll get there. And then also, I think we mentioned before, you want to make sure that you're researching whenever you do invest, you want to make sure that you know what you're investing in. Don't invest in popsicles because somebody just told you about it 2 weeks ago and said they made $10 off of it, and you think you can throw all your savings into it and think you're going to have a big come up. It generally doesn't work like that, and if it's too good to be true, it most likely is. Don't want that for any of you guys. And that actually brings me to a story about I had invested in this weird company that I never heard of, all because this guy that I worked with said that it was a good investment. And luckily I'm very cautious when it comes to certain things. So I did put a small amount of money in it. And needless to say, it's all gone. It went very fast. But I learned a valuable lesson. I'm glad it happened with the amount of money that I did use and not a huge sum of money. But yeah, I would say that you definitely want to know what you're investing in. And lastly, make sure you consult a financial advisor. They definitely have worlds of information that you can actually benefit from and make some smart decisions with your money. And make sure it's somebody who wants to teach you, because a lot of times they're not to scare anybody, but sometimes there's an incentive for that person who's advising you. So you want to make sure that you're dealing with somebody who wants to actually explain and take the time to educate you while they're helping you make these investments. So just something to think about as well.
Great points, Dira. And if I can add to that, it would be that you could potentially find a financial advisor through your employer. I know some companies have Fidelity and they offer free financial advisement. So that's a way to actually pursue that avenue. But
Yes.
all great points. I would leave everyone with this last point, and this comes from the guidance of Warren Buffett. Warren Buffett's 3 tips for investors are the following. One, don't lose any money. Two,
Good point.
think long term. And three, understand what you're investing in. I think Nadira and I have just shared only probably a few examples of the many we have of the bad investments we made. Maybe we'll make a video on that, Dira. All the bad choices we've made with investments.
Do we have time?
Absolutely, but all great learning lessons that we have been able to experience. Needless to say, that's the end of our episode today. We hope you found this information helpful and useful.
If you like this video, and make sure you comment and subscribe. Get in on the conversation. What pitfalls have you gone through with investing, and what triumphs have you had in the journey of investing as well? Let us know. We're really interested.
And remember, continue to dream big and don't forget the magic of being practical. Until next time.